All right. Welcome, everyone. So today, for our members-only webinar, I thought I'd cover morning and evening starts. So these are patterns that I use quite often. So I would go over them. I'll show you what I'm looking for in these trade setups and how we can trade them profitably. So just a quick disclaimer, as usual, this is for educational purposes only. If you have any questions about your individual investment needs, I recommend you talk to your investment advisor. And please be very careful trading, especially these days with all that political risk in the market. Market has been very volatile. So make sure you're not putting in the money that you can't afford to lose. So just be very careful that it is risky business. So be mindful of that. All right, so today we'll take a look at morning and evening starts. So these are reversal patterns, and we normally tend to see them at important support and resistance area, at key reversal points or key turning points in the market. And I'll walk through when to look for them and how to identify these trade setups. So in terms of the reversal patterns, there are several reversal patterns. There are heads and shoulder, double top, double bottom that I really like. Then we have engulfing chart patterns. But today that I'll talk about is morning and evening starts. So this is something that I do a lot of double top and double bottom type. I talk about those a lot. Morning and evening stars I haven't talked about as much, and that's why I wanted to cover these. So as usual, you know, our uptrend is when the market is making higher highs and higher low, and a downtrend is when the market is making lower highs and lower lows. So in terms of our morning and evening starts, these are reversal patterns that we would look for. Basically, if it's a downtrend, this is where we will look for morning and evening star patterns, and we would look for morning star pattern over here. So in a downtrend market, morning star will be formed at a key support and resistance level where the market pulls off of. So if you have identified your key support and resistance areas, you can just look for that trade pattern here, the morning star, and if you see the morning star, then you know that there is a counter trend, a reversal here, pullback that we could get into, but you would have to be mindful of the next support and resistance area. Because it's a downtrend, it's not likely to pull all the way up. But that's how you can use a morning star in a downtrend. And then evening star would be, you would look for a market falling. Here market is dropping, and once you've had a pullback and market comes to an important support and resistance area, and you see an evening star formed at this level, that's when you're looking to go short in this trade, and you look for price to drop. So same thing in our uptrend market. The market is going up, price is moving up, higher highs and higher lows. So in this particular case, we're looking for getting into an uptrend. So the way we would look for this would be, once the market pulls back here and it's at a key support area, we are looking for a morning start, because now we're looking to get into the trend going up. So here we would look for, at this level right here, we will look for a morning star, so we can get in with the trend and we can go on with the trend. And an evening star would likely be formed at a key resistance area, where we are looking for a new market hits a key resistance, cannot break through it, and now we are looking for a pullback. So at that level, this is where we are looking for an evening star, because that would be a pullback. So you can either get into this trade or just recognize that price is going to pull back and get into the long trade in the direction of the trend with a morning star. But you can use them, if you find them at these key levels, you can use them to trade either way. Counter trend trading is a little bit more risky, because it doesn't pull back as much. So the amount of pips you get from counter trend trade may not be too high. So it's easier to get into a trending market However, counter trend trades can also be very productive and very profitable, because let's say the market's moved 200 pips, it's likely that will pull back at least 50 pips. So if you missed this move up, you could get a few pips from the move to the downside. But again, be mindful that the counter trend trade won't be as big as our trending trade. So those are two. And then we have consolidating. When we have consolidating market, or market is range bound, then we would be looking for evening star at the top here. This is where we would already have drawn our resistance area, and we are looking for an evening star at the top. So once the market hits the high, we look for some sort of a reversal pattern, and one of those reversal patterns could be our evening star patterns. It could be any reversal pattern at any of these levels. So since we're talking about morning and evening stars, that's why I'm referring to those. But it could be any reversal pattern. But if you see an evening star, that's where you want to take an evening star and place the support above the high and come back. Likewise, in the bottom here, where we have support in a range bound market, this is where we would be looking for our Morningstar, so we can go long, because we already know in a range bound market we have these resistance and support areas. So these are pre-established already once a range begins, and then we're looking for evening star to sell and morning star to buy at the bottom of the range. So let's see, what do these look like? So here we have, in terms of an evening star, this is usually found at the end of a trend. So evening star would be, let me just draw it out here. So let's say market is going up and we are seeing this type of a behavior. So this is our uptrend. So an evening star, just think of an evening. So sun goes down. So evening star, we are looking for the formation up top here. So in terms of the time frame, it will work in any time frame. It doesn't matter. So 1 hour would be quite nice. I do like those, but you will see the evening stars form in all kinds of time frames, 15 minutes, 5 minutes. So whatever time frame you're trading from is fine. One thing that I would say to keep in mind would be the importance of support and resistance area. If it's at a key support and resistance area, it doesn't matter what kind of chart it is. So if it's a 1 hour chart and it's a key resistance area and you see an evening star formed, I would just look for a little bit of a pullback, about 50%, and then take that short. So it doesn't matter what time frame, it works in all of them. So here we have market going up. So what I'm looking for here is, now that we are, see how okay, so when you see price doing this, this is called a compressed move. This is what we saw in Aussie today as well. And we can look at the chart later. So here, once the move starts to basically lose momentum, it's not as strong, it's not getting anywhere. So generally the moves will tend to become smaller and smaller here. And this is when we are looking for our evening star. And what that looks like would be like this. So you have a bullish candle, because we are in an uptrend. You have a bullish candle here. And then in the middle here, you will have some sort of a doji. And then you will have the third candle. So it's a 3 candle setup, and the third candle would be our bearish candle, like this. So this is what it will look like. So you have a green bar going up, because it is an uptrending market, a doji, and the doji can be any color. The important thing is that we have some sort of a doji in the middle, and then we have a bearish candle. So this here is our evening star setup. So this tells us that market has lost momentum, and it's likely that it's going to come lower now. So we're expecting to see candles basically coming down like this. So that's our evening star. So again, so made up of 3 candles, a bullish candle. So it looks like my evening star here, this is wrong. So let's see if the next one is correct. Just give me a second. Okay, so just the writing is a little bit incorrect here. I'll have to change this because this is actually definition of a morning star. So this is what the evening star looks like. So we have a bullish candle, and so trend is going up. We are looking for this at the top of a trend. Evening star, think of evening, what happens in the evening, sun goes down. So that's what exactly what we're looking for. So we have a bullish trend here, and then we get an evening star, which means now it'll be evening, sun will come down. That's how I tend to see this. So this is kind of what we're looking for. So there's a bullish candle. This shows that the price is continuing higher. Then we get a doji in the middle, some sort of a small candle, and we want to see pins on this candle because we want to see some indecision. And then we get this bearish confirmation candle. This tells us that we are rejecting this support and resistance to the upside here, and likely the price will come down now. So again, it signifies the end of a bullish move. It is a bearish reversal signal, and we are looking to go short. So again, can be used in both trending as well as range-bound market. So in a range-bound market, we are looking for this setup at the top. So let's say this is our resistance area in our range-bound market. So let's say those are the two ranges. We're looking for this move, this star pattern at the top of the range, because we are looking for price to come down towards the bottom of the range. So that's what we'll be looking for in the range-bound market. And in terms of the entry, we are looking for, first thing we need is a bearish confirmation candle. Then our stop would go above the top, and our target would be the next major support or resistance area. So in this case, here is our bullish candle, our indecision candle, and this is our bearish candle. Once this candle closes, if it's on a 1-hour chart, it's better to look for a bit of a pullback. However, the entry could also be at the close of this candle. If we don't look for a pullback, it's all right. We just need to understand that it may pull back here slightly, but otherwise the entry is just fine. So it may pull back like this and then drop, which is totally fine. All that means is that you may be sitting in through a little bit of a loss, but our stop would go above the high here, and our target would be the next support and resistance area. So next major support and resistance area, that's where we are looking to close the trade, and we can put our targets and stop loss and target right off the bat. So Morningstar is the opposite of that. Now with the Morningstar, think of it like the sun rises in the morning. So we're looking for price to rise. We're looking to go long in this. So here we have this morning and evening star reversed from before. So, but it's still found at the end of a trend. So the evening star, morning star is found at the end of a downtrend. So in this case, price will be coming down like this. And then we would see this evening star pattern. In this case, we will see a red candle here. We'll see a red candle, and then we'll see a little doji in the middle. And then we will see our green candle, which is, oh, it didn't change. Here we go. So this will be our green candle going up. So once we get this green candle, if it's on a higher time frame, it's better to look for a pullback. But if it's on a 15-minute, even 1 hour, all we're looking for is price to continue higher here. So this is where we're looking for another move to the upside. So this is the pattern. So we're looking for the 3 candles. So bearish candle, and then we have doji in the middle, and then a bullish candle. So this gives us a signal that price is likely to continue higher. This is what it looks like in real life. We have first bearish candle, which will show us, oh, looks like the trend is going to continue. but then we don't get a follow through on that. We get the indecision candle, and then it will pull back here. So in terms, so these are the three candles. So always it's a three candle pattern. Again, it occurs at the end of an extended downtrend. It signifies end of a bearish move, and we are looking to go long in this setup. Okay, sounds good, Walter. Okay, here we go. That's our Morningstar pattern. So now let's take a look at how do we enter this trade. So first thing we're looking for would be close of a bearish confirmation candle. Then we have our stop. Oh, that's not quite correct. That's for evening star. Here's our morning star. So we're looking for first a bearish candle, then our indecision candle, and a long confirmation candle. So in this case, our stop would be below this here. Make sure we do give it some room to breathe. So it needs to go a few pips below here. And then our entry can be at the top of this. Once the candle closes, you can either look for a pullback, or you can just enter the trade right at the close of the candle at the beginning of the next candle. And now we're looking for price to go up. So in terms of our drawing here, it would be markets coming down like this. Then we hit our morning star pattern, and then think of the morning, sun is going to rise, the market is going to rise, and we are looking for price to move up higher. So this is generally what it looks like. Okay, so here are some examples of an evening star pattern. Here we have, this is New Zealand US dollar 15-minute chart. Here price, this is a downtrend. Price has been going down, and then we see a pullback. So in the pullback, price is going up, and now we are seeing a continuation move in the direction of the original trend. So this is an example of taking this in a downtrending market. So we're trying to go in with the trend. So here we see at a key support or resistance level. In this case, our support or resistance level is right through here, this one. So if we take a look, let me draw it out. So this is our support and resistance level. Price had reacted before, it reacted again, and now it's just shy of that support and resistance level. So once we see this pattern, so this is what it looks like. So we have a bullish candle, and then we have a little doji in the middle, and we have a nice bearish candle. So this is our evening star. Our stop, I would put the stop above the high here. So here's where our stop would go, and we can enter the trade. So this is what I was talking about, pullback. So you can take 50% pullback, or just enter at the bottom of the candle here, and we are looking to go to the next support or resistance area. So this is also actually a very good example of a trending market. So here, oh, that's not a good color. Let me pick something we can see. So see how price goes down and then pulls back up and goes down. So when you see all these diagrams that we draw of the up and down, this is what we are drawing. So we are looking for price to move down, and it will move up and then come back, and then see how it pulls back again. Then we're looking for another move to the downside. So this is what a trend or a trending market looks like. So it doesn't always just drop. Actually, it never just always drop. There's always pullbacks, even in a trending market. And this is the kind of move we are likely to see in a trending market. Sometimes we'll get trends where the market just drops, and then it may do a shallow pullback and then goes back. That's a trend that would be a very, very strong trend. But normally in our trending markets, we'll have something like this. Market pulls back, then you're looking for evening star at the previous support or resistance area, and looking for market to drop again. So let's take a look at another example. So this is another evening star trade setup. So here is our support and resistance area at 78.20-ish. And in this case, we have price going up, and then we get this evening star pattern. So this is the daily chart. right? This is the daily chart. So like I said before, you can use this on all kinds of different time frames. So we're not tied to a particular time frame. What happens with the daily charts, or when you're trading the higher time frame chart, hourly, 4-hourly, daily, stuff like that, then our stop loss would be further away. So in this case, this is what I was saying, sometimes it will pull back. So in this case, it pulls back about 50%. So you can either enter here, or you can enter at the close of the candle. Stop loss would have to go above the high. So this is where in this, our stop loss would be a little bit for a little further away. So just make sure when we enter this trade, we are entering it with a smaller position size, because we may have to sit through a bit of a pullback here. So if you're entering at the bottom, we may have to sit through a bit of a pullback. So the stop needs to be up there. So the position size would be smaller when you enter here, because it's very likely that we are going to experience a bit of a drawdown once the price is pulling back. But regardless, it didn't come close to the stop loss, so we're just looking for market to go short. And as you can see here, we have these nice pushes to the downside, and then price starts to compress. This is what I mean by compressing price. We see how these candles are nice and big, very, very strong candles, and then the candles start to get smaller, and we're getting smaller, and then it looks like it's not really going, even though it's looks like it's moving lower, the price isn't really doing much. It's just kind of rounds off at the bottom. So that's called the compressed move, where price just slows down. Here it's very parabolic. It moves down quickly, and here it just sort of rounds off. And then normally when this happens, we're likely to see the price go up again. So in this case, there are two ways to exit the trade. One, we can exit it at, actually it looks like it went here. So anyway, so we can exit it here, this support or resistance level. So you can just exit the trade. Once you get this little doji thing, you can exit the trade there, or you can look for, so this is our, funnily enough, this is our Morningstar in the opposite direction. See, this is our Morningstar in the opposite direction. Time to exit the trade, because we see a reversal signal now, which will signify the market is likely to go up, and that's what happens. So here, this is our evening star pattern again. Sorry, this is our morning star pattern, and this is our evening star pattern. So in the evening star pattern, we sell. In the morning star pattern, we buy. And as you can see, it goes up. This one, we go down. And when you're trading higher time frame, our stop loss will be further away, but then our target will be further away as well. So in this case, it was a nice 535 pip move. So you would keep dragging your stop loss with your trade. So just put it above the previous high like this and keep bringing it down. So even if you don't manually exit your trade, your stop will get hit at this candle here, and you would be out of the trade with a profit. Any questions so far? Is this making sense? Okay, perfect. All right, so let's look at another example here. So this is our evening star pattern. Again, we have a trend going up, see pullback, another move to the upside, and then we see this is Euro Yen daily candle. So we see a bearish pin bar, and then followed by that, we see this evening star pattern. So we have a bullish candle, a doji in the middle, and then a bearish candle here. Again, in this case, we can either take a 50% pullback, or you can enter at the bottom of the candle here. So just to be aware of this, our stop loss will go above the high, but see, you could get a bit of a pullback. That's why if you take an entry after 50% pullback, you're not sitting through as much of a drawdown, because this is where it could really cause you to question your trade. But in this case, price is just kind of staying there, and we almost get a double top here. but this is our evening star pattern. So here we have a lot of reversal patterns. We have a pin bar, evening star pattern, another pin bar, and then we get this double top type thing, and then the price drops. So it could sit there for some time, so we have to be patient. So when you're trading from a longer time frame chart, just remember that you may have to be patient for a bit. But this is a nice evening star pattern. Entry could be on the 50% pullback or at the bottom. Stop goes above the high, and then we are looking for price to come down. In this case, this is a major support and resistance level here. See how price had pulled back after the big momentous move to the upside. Price had pulled back to this level. So this is an important support and resistance level. And as we can see, price starts to pull back off of this level. So somewhere in here, we can exit the trade. Again, I would recommend just move your stop as the trade goes along, because this it's 575 pips in this trade. So you do want your stops to be, or you do want to pull your stops, because you don't want a 500 pip stop like way at the top. Here you just are putting the stop up here. So you don't want it to become a 500 pip stop. So you want to pull the stop along, and at some point either you will get stopped out with a profit, or it will hit your target. So you can just put your target at this next support and resistance, just above the next support and resistance area. That way you don't have to worry about chasing it down. Just keep moving your stop, and you will be taken out of the trade. Here's another example here. So I'm trying to show you different, the ways they can look. So in our real life, the patterns aren't picture perfect. So that's why I wanted to show you what the dojis could look like and what the pattern here looks like. So this is another evening star pattern. Here we are looking at Aussie US dollar 1 hour chart. So here we see a move to the upside, a bit of a pullback, and then another move to the upside. And then at this support, this is our R3 level actually in our pivot point. Welcome back, Walter. Here we have, this is our R3 level. So it's an important support and resistance area. And this is where we see this evening star. So we have a bullish candle, a doji in the middle, and looks like price at one point looked like it was going to break through, but then pulls back and closes with this bearish candle. So this is our evening star. So now we know it's an important support and resistance. We have had this rejection, bearish candle, and now we can enter the trade. So again, you can enter it at the bottom, or you can wait for a pullback. So in a 1 hour two, I would recommend waiting for a pullback, but it doesn't matter. So if you just need to enter the trade, you can put your stop loss above the high here, making sure you give it some room to breathe. And then we're looking for price to come down. As you can see, price comes down here. This is another within the evening star pattern. So normally when price pulls back, this is what generally happens. So this is sort of like our double top here as well. So once the price breaks through the neckline, it will usually come back and test the neckline here. So it stays below. This is another evening star pattern, and this is another trade. So if you missed the first one, we could get into this second one. But as you can see, these evening star patterns do tend to set up frequently. So it's a good idea to watch out for them. Here is an example of a Morningstar pattern. This is our inefficient move that is getting filled here. So here we have price coming down. We establish, and generally, like I see this quite often as well with the inefficient moves that we talked about last time. Have an inefficient move, then you get a little bit of this indecision candle, and then price pulls up. So, and then you may get a higher low right here. So this is our Morningstar pattern. We have a bearish candle, small doji, and then a bullish candle. This will tell us that price is likely to go up. And also this is on the at our S1 level in terms of the pivot points. So good trade to take. Again, as you can see how it pulls back a little bit. So a lot of times I've noticed the price may pull back 50%. So in this case, the stop should be below the low, because sometimes, especially in these kind of moves where you have price moving down so fast, sorry, even that is a little bit close. So slightly lower here. Let me clear that. So I'll put the stop right there, giving it some room to breathe, because sometimes it could do another one of these before it goes back up. So be mindful of that. So our entry would be either 50% here, stop goes below, and we are looking for a move to the upside. So in this case, the first thing would be filling this inefficiency, see how it fills the inefficiency, and then it goes to close the trade. Okay, so that's evening star. Again, we're looking for a downtrend, and this will be found at the bottom of a downtrend. And we're looking for morning star. We're looking for price to go higher. Here's another Morningstar trade. As we can see, price has been coming down here. And then this is our S1 level. So again, you're looking for this setup at some sort of important support and resistance level. This one is a 5-minute pound yen 5-minute chart. So as we can see, we're looking at examples from different time frame charts here. So here we see that the price has been coming down for some time. Then we get this bullish pin bar, but price goes back, tries to go back lower, gives us this Morningstar pattern. So we have a bearish candle, little doji in the middle, and then a bullish candle. So this is our Morningstar pattern. And from there, our stop could be below the pin, making sure it has to be below the pin. Because it could come back and do it a third one. We don't know. It could do another third one here and then go back up. So we just enter the trade long. So here's what I was saying with a 5-minute chart. We don't pull back generally as much, or we may not pull back as much. On the higher time frame, generally there are pullbacks. On the short one, there may not be. So this is a 5-minute chart. So we enter the trade here, then we go long. So this is our first support and resistance area here. Price breaks through, holds above, and then continues on higher above the pivot point. And then we could go, this is the end of the day here. So you could close the trade, or you can have the first target set up here. So you take something out of the trade, and then as price goes up higher, this is the second consolidation, or after the consolidation, price breaks through and goes up higher. Oops. Okay, here's another example of a Morningstar trade setup. This is, again, Aussie US dollar 1-hour chart. So here we see that price was coming down, goes back up, and then this is more of a range-bound market. So where we have in the bottom, we have our support level right over here. As you can see, price comes down, bounces off of this level, and then comes into the same support and resistance area. And now this time we get a Morningstar. So we have a red candle, doji in the middle, and a nice bullish candle. We have a little bit of a pullback. Generally, you'll see the pullback will come and touch this tip of the doji here, the pin there, and there we can enter the trade. Stop would go here. I generally like to put the stop below here, over here, and then the price will move up higher from there. And as you can see, once we get to the next support and resistance area, see this little top side here, we want to exit the trade. And here we have price pulling back. So time to exit the trade at next support and resistance area. And this one is 75 pips. So, okay, any questions? All right, so no questions. Perfect. So I think that's all we'll cover today. Just wanted to make sure that I familiarize with you guys with the morning and evening stars, because I do look for these patterns, and I haven't really talked about them quite as much as I talk about double top, double bottom. So hopefully, now that you know what they look like, you will start. You can start looking for them on the charts. I do recommend go backwards on the chart and do the homework. So go back on the charts and see if you can identify these trade setups. Because if you can identify them in the past, it becomes easier to identify them when they're actually setting up. Okay, so that's all for today. So we'll call it a wrap unless there are any other questions. Yeah, feel free to go over the videos and also look at these examples that I have put down here. See what they look like, because when this is setting up in a real live market, sometimes we question ourselves. So if you focus on it and look at these and identify them on your charts going backwards, you will get familiar with them, and then just like double tops and double bottoms, you'll start recognizing them and they become easier to trade then. All right, everyone, we'll call it a wrap, and I will see you guys in the trade room on Tuesday. Have a great weekend.